Well, the overall retail sales number came in better than expected, largely boosted by a big jump in auto sales, and there were noticeable declines on some discretionary spending. Receipts from stores that sell home furnishings, electronics, appliances, healthcare products, they all fell. And my next guest says we're headed for more trouble. Let's bring in Gerald Storch. He's CEO of Storch Advisors and the former Toys R Us CEO. Mr. Storch, welcome back. Where's the trouble coming, and where's it coming from?
Look, when you see what people are spending money on, they're spending it on food at grocery stores, and they're spending it to do work on their homes themselves. That's not what people do when times are good. So basically, we're looking at high inflation. We're looking at a serious situation where the problem was created by fiscal policy, by supply chain issues, by energy issues, by employment issues, and by monetary policy. And the only thing we're addressing is the Fed's addressing monetary policy. So all they can do is keep raising rates until they drive a stake to the heart of the American consumer, and that's exactly what's happening right now.
Should we have
more and more?
Should we have any surprise that one of the reasons the number came in better than expected was a jump in auto sales? The price of cars, new cars, is so high right now that it alone could drive retail sales higher.
First of all, there's a lot of pent-up demand because cars simply haven't been available.
True.
Secondly, that increase was 6.7%. I bet the price of a car has gone up by more than that. Look, you just go to the lot and see, and there's no negotiating. You pay the sticker price now, right? So that's no surprise at all and has nothing to do with what's going on underneath it all, which is that prices are right. Look at grocery prices are up double digits still. Right. So people are using their money to do what they have to do first, the must-haves. Meanwhile, apparel, even though it looked a little better during the back-to-school season than it has, still one of the worst numbers on the page, is apparel. Department stores, same thing. So when we get to the fall, I think you're going to be in a world of hurt. People like Gap, big trouble right now on the horizon for these companies.
I want to mention that you are listing out 5 reasons why we're in this problem, as you see it. Fiscal, excessive government spending, you say, supply chain, energy, employment, because there's still a shortage of workers for many of these companies, and monetary, these loose central bank policies. We just heard Nancy Tengler talk about Target and how she likes the strong management there. If we're in such a difficult position because of factors way outside of the company's control, can the risks be managed by strong leaders, by strong corporate teams?
Contessa, I totally agree. I think they can be. And it's the value-based retailers who are going to thrive. Target and Walmart, they certainly had very tough springs. But that was left over as a hangover from what happened last fall when they bought too much, trying to get product through the supply chain and not knowing what to buy and how much to buy. They're smarter than that. So they're going to be in good shape in the fall, and they represent value. People like Costco, again, still year in and year out, a perennial outperformer with the consumer. And of course, the dollar stores, Dollar General, Dollar Tree, I think they're so well positioned. And you can't leave out the home stores. If you look at these numbers, one of the big surprises is it doesn't seem to matter what's happening. People are spending at the home centers, and that's in these numbers very clear. It's an open book exam. So you're going to see great sales at a Home Depot and Lowe's when they report.
Let's look at a couple of problem children that you point out, Gap and Kohl's.
Well, look, apparel has, it's been a sort of the off cycle for apparel for years and years and years. There's been deflationary pressures in apparel prices. So even the units have held up sometimes. The average price has not. That's going to continue. There's so much clearance apparel out there. Mm-hmm. So they're heading into a storm that just isn't good. It's true people bought more apparel for a little while when there was a reopening, but they're kind of done with that. When you look at what's happening with sales, it's really not working anywhere but luxury. And it's sort of been a surprise how well luxury's held up. But luxury is highly correlated with the stock market. There have been ups and downs there. The stock market continues down. Even luxury is going to follow.
All right, Jerry, always good to see you. Thank you again.
Shepard Smith here. Thanks for watching CNBC on YouTube.